Hello, I'm Monica Gibson and I'm joined down the line by Jan Randolph for the Dukascopy weekly wrap-up. So Jan, just for a change, the theme for this week has been Greece. Again. Now we've just have news of an offer for a 5-month extension from creditors to Greece, but tomorrow we have yet more talks due to take place, which Angela Merkel has described as decisive for Greece's future. At this stage, how do you see this situation playing out? Could Greek banks close on Monday?
I think the gaps between the two sides are actually quite narrow when one looks at it from a distance, and should be bridged. But I think the tensions and the extended brinkmanship has created a less than amicable atmosphere. So there is still a chance of a possibility of no deal. But on balance, I think the downside risks for Alexis Tsipras are much, much greater without a deal than with a deal. With a deal, he is likely have to go back to Athens and pass this through Parliament. But it's very likely that parts of the Syriza coalition, namely the hard left, think that he has already crossed red lines in their minds, particularly over pensions. And he may well win a passage of a deal through Parliament, but only with opposition help. And it will lead to a severely weakened leadership within Syriza. So it's looking difficult for him politically, even if he does secure a deal.
Elsewhere, news overnight was good in Japan. Meanwhile, the RBNZ is talking of further macroprudential measures on housing, which seems an invitation to price in further rate cuts and therefore to be bearish of the Kiwi dollar. Now, amid all the turbulence, which currencies are you favouring at present?
Well, I think the New Zealand situation is quite interesting because they had been on the back of an economic boom, dairy products to China and Asia, but that softened and cooled quite a lot. And it had been one of the first central banks amongst the advanced economies to raise rates up to 3% or more. And it was hugely attractive to carry trades, particularly from Asia, with that margin, attractive yield margin on bonds. And that had helped strengthen the dollar, the New Zealand dollar, that is. And it had put pressure again on exports. So the central bank, New Zealand Central Bank, has tried to loosen turnaround monetary policy, started easing, but it doesn't want to reignite a housing market bubble, and that's why it simultaneously introduced these macroprudential measures. On the back of that, all this, which currencies are favourable? I think New Zealand dollar will remain favourable because the margin will remain positive for other investors which have funding costs set closer to zero.
We also saw the biggest fall for the Shanghai Composite since January. For every 66 stocks dropping, only one was rising. Some analysts are actually saying don't buy the dips as we are venturing close to a bear market. But what is your analysis?
Well, I think if we stand back, the Chinese stock markets have risen almost double from May to May this year. And what we're seeing now really is a healthy correction. The economic fundamentals didn't really warrant a doubling of the stock exchange over the last 18 months. So we are seeing a healthy correction. It's been very swift. I think the authorities are keen to limit or at least downsize the amount of margin trading, that is borrowed money invested into the stock market, which adds to the volatility. I think this can only be seen as a healthy correction, but one has to be careful that they don't want to have their stock markets appear to be cowboy-like because they continue to want to attract foreign investment, and they do want to manage the renminbi into a more international status, and that means a bit of discipline when it comes to the stock market. So everyone's turning to state media to see what signals are coming from government and the Communist Party in terms of will they eventually come in to support the market at some point. I don't think they're there yet. But if we see another fall of the kind we've seen so far, they may well take some supportive action to provide a floor for the market.
And so next week, apart from the deadlines we've discussed, we have a Thursday NFP report as well as ECB minutes, as well as a scattering of central bank decisions. But which events would you suggest our viewers keep a close eye on?
Well, I think the ECB, for all sorts of reasons, it's still central to the Greek drama. it's still central to the nascent recovery, broadening recovery in Europe. Weak though it is beginning to take root. I think one of the key indicators from the ECB is less on interest rates, more to do with what it sees in terms of inflation, whether we've got deflation behind us in Europe. And also, I think importantly for the European recovery, what's really important is lending. The ECB has provided a long-term facility for lending into the real economy, and that seems to have worked. We're now seeing net lending improve positively. So those are the sorts of issues I think we need to look at.
Jan, thank you. Well, what will those NFP figures show? Will German inflation disappoint? And will Greek banks have to close on Monday? The TV team will be here to digest all the news with you, so join us again then. But in the meantime, have a great weekend. Goodbye for now.